Good day, India, and to anyone watching from anywhere. What a year it has been. Today, we're having a conversation about three distinct time frames with investors who were on hand to manage the COVID crisis in India. We'll do a bit of storytelling here with videos showing how companies maneuvered the lockdown. We'll hear how investors and founders responded and accelerated forward. My name is John Duncanson. I want to introduce our panel members. Anuradha Ramachandran runs Flourish Ventures in India. Harsh Gupta is a rising fintech investor on that team. Also with us, Flourish managing partner and co-founder Tilman Erbek. They'll reflect both on how companies handled the lockdown in India and what a post-COVID world will look like. We're asking you now, for just a moment, to go back and try to remember all that's happened this past year and remember where you were.
We begin in India, now the country with the third highest confirmed number
It hit everyone hard, right? I mean, nobody was expecting it.
The COVID pandemic hit India with fear and uncertainty.
It was really the pain that our customers were facing, translating into what it means for our business.
Founder and CEO Alok Mittal runs Indifi, a small business lending platform startup.
Our loan, your growth.
Operating in India, one of the 15 worst affected economies worldwide. 75 million after the COVID lockdown, pushed below the poverty threshold of earning less than $2 a day.
So we faced the derivative effect of what our customers were going through in terms of credit losses. Our new dispersals went down to zero before we started to recover from that.
Millions of unemployed workers pouring out of cities back to rural homes as India's GDP contracted by an expected 8%.
Micro-insurance.
For Toffee, an insurance startup enabling underserved populations, business still included meeting clients face-to-face until lockdowns shut down that option.
Because there was sort of this consciousness around, I don't want to meet anyone, there is a safety element of it. So that sort of took a little bit of time for us. And of course, that had sort of follow-on effects on the business.
The pain spread to Indian gig workers. A recent Flourish Ventures survey found 81% suffering a major income loss during the government lockdown.
On downloading the Shubh Loans app.
For My Shubh Life, a digital lender for clients lacking traditional lines of credit, the problem for them, millions in US dollar equivalent lent out to clients with salaries reduced, or worse, clients no longer holding jobs.
We had to suspend lending for a while because of the pure fact that, we didn't have enough coordinates to decide who to lend to, who not to lend to.
There was a general sense of pessimism towards lending businesses in the whole ecosystem.
Not every financial sector felt equal pain. Some felt none at all. In fact, the opposite.
Gram cover grew more than 100%.
Jatin Singh runs Gram Cover, selling online insurance policies to rural farming areas in India, a sector boosted by government crop procurement and pandemic aid. People wanted, above all, protection.
These are people who really do not need a lot to live and survive. And with digitization, the cost of services has significantly gone down. So the demand for those services is going up, especially when it came to insurance.
For entrepreneurs and funders alike, a major question. When catastrophe hits, how do you survive and how can you accelerate toward the future?
Yeah, we completely ratchet back on marketing. We put our hiring freeze. We renegotiated our rentals. So conservative on the capital side, on the cost side, prudent on the growth side, and then we prayed like crazy.
I want to go over the initial impact of those first few months. Tilman, what was happening from your point of view as investors looking into, really what was a sea of uncertainty? You had money on the table in India and beyond, and you had companies with real people all wondering what was to come.
Thanks, John. Just watching these clips with you reminded me how really unprecedented the situation was and how sudden these changes came. And the two things, trying to think back to that time, the two things that still strike me today are, first, there was an incredible desire to collaborate. Everybody wanted to figure out what is going on and what might this mean. So we connected to our portfolio immediately. We connected the portfolio to each other, and we spent a lot of time together at all hours trying to assess the situation and the implications. Incredible spirit there, collaboration. They are still together on WhatsApp groups today, some of these CEO groups. And the second thing that struck me or strikes me remembering back from that time was an incredible desire to make a contribution. I think we all realized, our portfolio companies realized, this is bigger than all of us. And they wanted to make a contribution to their community, to their country as they were coping with this unprecedented a situation. And some of our companies found themselves to be vital for logistics efforts. Some had knowledge around digital payments, which governments needed to leverage. I remember we had a team call in April where we went around the globe and everybody was updating each other on what was happening. And it was awe-inspiring how much all of our portfolio companies were stepping up to the plate.
Tales from the battle. Anuradha, how do you first approach a company's CEO? It's almost like, well, we're in a fine mess here, aren't we? I mean, this really was unprecedented.
So yes, this was actually a crisis that like none before. However, reflecting back, I kind of like remember one thing that stood out for me, which was that most of these CEOs were very experienced people. They had gone through perhaps not the same crisis, but different crises, right? Like there was a 2008 situation, 2016, India had demonetization. So they had dealt with crisis and, like they knew that they could act. It was much more about what's the scale of action that we need to take and where do you focus your efforts on. And in that context, they were collaborating, as you just mentioned, with us, with other people on their board, and with other portfolio organizations. The second thing that struck me in those conversations was about how thoughtful they were about the immediate safety of their employees and their customers. So that's where their thoughts went first. How do we deal with like keeping business on? How do we deal with actually customers benefiting from what we can offer them? This was done, again, not with necessarily a business or a profit motive, but much more about how do we serve them in a time of need. So that was kind of inspiring for us as well.
Interesting. And experience is everything. Harsh, tell us how the business customer got hit in all of this and what businesses did to shift the focus to those customers.
I think with times, right, as Anuradha clearly mentioned, the focus of these founders was first to ensure the safety of their employees and then immediately turn to understand what are the real needs of the customers and what are they going through. Different businesses were going through different impacts with different end customers. Right? So, for example, for a portfolio company, Shubh Loans, where, as we saw in the video as well, they were dealing with the gig economy workers. At that point of time, it was really important for them to reach out and understand how are these guys doing. What there was a huge migration of labor which was happening, ensuring whether the end customers are safe or not safe, and coming up with a plan of action to just be there for them, to be there for them and to hear them out. Right? Similarly, for a lot of our portfolio companies like Scriptbox, Atul mentioned that they opened up their calendars as the markets were crashing. They opened up their calendars just to hear the customers out, just be there for them. Right? So I think from the business's perspective, the first step in April, May was just to be there for their customers and hear them out and just be available.
Did you ever get the call, any of you, that hey, I need some help here. Can you give me some perspective? Anybody want to touch that?
Well, I can take that. So yes, people proactively reached out to say that, we need to understand, how is a board going to support us? Because on the one hand, especially on the lending businesses, right, they had to stop lending. They didn't know what was going to happen next. So they needed to understand and get a perspective of how the board would function here, right? How would investors support them? What do they need to prepare for, etc. And also to get a little bit of sense of what was happening around the globe, right? Can we get a perspective from other markets? How are people dealing with it? It is not a one size fits all, but you always derive more from your peers' experiences as well. So it was like quite heartening to see them reaching out and just asking questions fairly freely. So that was encouraging. And as we put together a whole conversation for people from different countries to share what was happening with them. And I believe many of them found it to be very, very useful.
Yeah, so important. But really, Tillman, at what point do you stand back and let the CEO teams figure this out? I mean, when you connect them with thought leaders or other people in your network, do you say, stay calm, this too shall pass? How does that work?
What was important was initially to just be there for each other. And I stress the each other because this was unprecedented. Nobody knew. What helped us a lot on our portfolio, what helped us a lot was we just in the fall of 2019, we had brought together a large number of our portfolio CEOs, founders, in person in London. So there were already connections, people knew each other. And so it was very natural for them to pick up the phone and just ask, what do you see? What do you think? And we collectively built an assessment, if you will. And then, of course, relatively quickly, the folks on the ground, company CEOs, senior teams, know what's best for them. You can't prescribe them from far away. There was an openness, though, I would say, John, there was an openness, a willingness to be vulnerable, to share, that was also unprecedented. And it just speaks to the time. People wanted to talk. They were not afraid to admit that they might not know. Frankly, our relationships have become much, much, much closer as a result of this joint lived experience.
People learn to lean on each other. That's a great story right there. Okay, so the last thing you'd expect early on in a catastrophic event is to find any kind of positive outcome. But by early to midsummer, that's exactly what we saw. Companies actually accelerating into a future that no one expected to happen until much further down the road.
Midsummer 2020 saw government stimulus taking root, businesses pivoting as they saw surprising opportunity.
It's been a great year for us. I mean, if I look back to where we were a year ago, to the day, we are 3x in terms of size. So to go through a pandemic and come out of the other side, a stronger business, a stronger brand with more customer love.
What COVID took away, it began to give back. Companies forced to take a close look at the landscape and how they could quickly pivot to reach clients hit hardest.
So it kind of fast forwarded. So it was like a catalyst. It would have taken years for us to get there.
A jumpstart, forcing emergency ideation, catapulting business operations as well as public response far into the future.
We went from 3,000 customers to 500,000 customers.
For Sucharita Mukherjee, co-founder of wealth tech platform Kaleidofin, she saw a jarring shot in the arm, forcing her company to bring 3 new products to market at warp speed.
That was really a pivotal moment for us because I felt like, this is the time when our customers needed the most and we were able to deliver to it.
The whole lockdown thing happened when we were just about to launch our product. So it completely sort of decimated our go-to-market, it decimated our strategy.
Nilesh Argawal of Yellow likens COVID to sitting on a ticking time bomb, waiting for the crisis to end, not an option. Shifting to a local market focus saw customers download thousands of the Yellow app.
And we are now working on taking it to the next step. But the interesting thing was our retention rates were, some 30-40%, even after 3 months of the app download.
The double-edged sword of the COVID pandemic, first crippling entire countries, then sparking shifts in strategy.
I mean, if you look at us today, we are not a lending company alone.
My Shub Life saw the shutdown as a time to change course and offer more products.
We are a full stack financial services company. So what really COVID has done is that it kind of fast forwarded our evolution from being just a lending company to this neobank of sorts.
Indians both in rural areas and the cities forced into an unknown digital world to communicate and create a post-COVID world.
What used to be digital by design became digital by default, right? You had to do things that you would have otherwise thought bankers would never ever do.
They're finding it much more convenient to apply for loans digitally. They're liking the fact that it's very contactless. They're liking the fact that it's very convenient.
You have been hit by something. One option is that you just roll over and wait for COVID to pass. The other option is you say that, okay, now this is the new world. What do we do in this new world?
And different founders told us, that this accelerated quite a few events. It really moved things forward. Anuradha, talk a little bit about that, and then Harsh, you can add something if you feel like it after that. I'd appreciate that.
Oh, certainly. So, the first thing that we kind of saw was digital was getting accelerated enormously. As I think one of the CEOs put it, I think it was Madhu. He said what we expected to happen in a decade happened in about a year, right? So that was a pace of acceleration. It kind of quickly made people move towards their mobile phones for ordering. It could be e-commerce for their payments, for everyday needs, or it could be for their savings, etc. So we saw that action on the digital platform was happening from all fronts as such. So this acceleration was something that actually played a little bit into our thesis as well. In our context, we expected people to use the digital medium because it is much more convenient, but people had an issue with trust and to change from existing behavior. But in this context, they moved over to digital usage much faster, and they realized that it was not as inconvenient. Right? For example, people would sign papers, would want loan papers physically delivered to them for them to sign. But now, in this context, they quickly moved towards e-signatures. They would not think about saving, right? Because it is about putting money on the internet or digitally. But suddenly, in the context of the crisis, you actually say, okay, let me try this digitally. And that seemed to have worked. The regulators actually also stepped up, which was another good sign, because many things which were earlier required to be physical, wet signatures, be it KYC, etc., also became digital. So in that context, there was digital acceleration from adoption, be it end customers or small businesses. Small businesses picked up tools like never before. Because they were using tools, there were better digital trails, data trails, which could be used to improve their experience on multiple financial products. So end customers and small businesses picked up, the digital adoption much faster, and regulators actually stepped up to help that process as well. Financial institutions stepped up to, to play into this element as well. So it was a very interesting, a very interesting agglomeration which happened at the same time.
Harsh?
Yeah, I think, John, really, I think as founders, these founders are used to face adversities and take them head on and take it in and convert them into opportunities, right? I think some of these founders really used the opportunity or the pandemic and had a silver lining as well. So we really saw founders who went out and used the opportunity to diversify their businesses. So as we saw Monish speak in the video about My Shub Life, they always had plans, right, to launch different products, to include mutual funds, to include savings, to have ability to open bank accounts, right? This was always there in terms of the path of the company, but all of this got accelerated. This was the need of the hour. This was what was required by the end customers. Similarly, for Sucharita from Kaleidofin, she mentioned and she spoke to us, right, where they launched three different products, which were Kaleido Pay, Kaleido Credit, and Kaleido Scan. Kaleido Pay enabling people to make digital payments over feature phones. Now, given their end customers, this was really the need of the hour to enable digital transactions, as Anuradha mentioned. Given all of us were in lockdown, there were digital transactions which were accelerating, but you also had to cater to the as per the needs of the end customers that you have, and different set of customers had different requirements. So for example, in case of yellow, the end customers that they're dealing with, which are the blue collar workers, they really needed ports of liquidity, and one of the form of liquidity were the provident funds. However, those kind of savings existed, but people didn't know how to access that. So from a company's perspective, it was also building products which were really required by the end customers. And I think the founders, catering to the end customers, which is always, I think, the ambition and the goal of a startup, use this adversity into an opportunity.
Yeah, silver lining, and as one founder CEO told us, if it wasn't COVID, we'd be moving in another direction one way or another. That's just what happens with startups. Tillman, Flourish oversees investments all across the globe. Do the experiences that we see and hear in these cases in India, do they echo evenly with startups you invest in overall, especially in this time?
They do, and Harsh and Anuradha gave great examples of what the Indian founders and CEOs did. If you step back after the initial assessment, sort of in the May-June timeframe, as we stepped back at the time, and jointly with our portfolio tried to think through what are the implications, it actually pretty quickly became clear how these behavior changes would impact the businesses. And so take a product lens, for example. It was very clear that anything that has to do with digital payments, wallets, transaction accounts, even savings in digital form, as Anuradha mentioned, all of that obviously became more important, accelerated. If you take the insurance side, travel insurance was not important anymore because nobody could travel. By contrast, critical illness, health insurance became very important. And even on the credit side, while obviously the needs and the business mix changed a lot, it wasn't that credit wasn't needed. And it depended very much on understanding the underlying customer segment. So for example, if you were a small business lender, lending to restaurants obviously was impacted because restaurants were shut down. Lending to the small corner store that had become part of the vital infrastructure to provide for the country, that was actually good lending. So our portfolio across the world and our portfolio leaders across the world very quickly realized what the implications were, and they were very clear-eyed in reacting to that.
Well, what's really interesting about all of that is that what came up over and over again was that increased cohesiveness. Can you pull the curtain back a little bit, Anuradha, on that? Is that in any way forced? Is that just because we're all in the same room together and we know we're going to be there for a long time and we have to put up with each other? So let's just make the best of it. In fact, let's make the very best of it.
Actually, I would say that it was just responding to the need of the hour, right? These were startups. Suddenly, they were faced with the notion of working with dispersed teams, right? Like everybody used to be in the same room, and they felt that that was the best way to operate. But now suddenly, because of the fact that you couldn't even come to office, you had to figure out a way of like handling dispersed team. You had to keep their motivation and morale up, right? So it was, and the second thing was how people were responding to their customers. Like they were looking at what do we need to do for them. That meant they were listening much more closely. They were listening more as well. So these were just responses of the hour. Nobody was necessarily thinking, oh, we need to collaborate. It is just that, like if we need to do things in a dispersed way, if we need to figure out what will work for people, we just have to do it, right? Like, so it was a very, very, it was just, I would say, serendipity that it felt very cohesive, that it felt very collaborative. But for the most part, it was people responding to the situation and responding thoughtfully, I would say.
You were talking about how people kind of stepped up with technology and how that has kind of changed the game and moved from paper to cell phones or other electronics. Is this, your companies deal a lot in underserved markets? Is this something that we're now seeing that is a huge market that everyone heretofore has kind of ignored, and suddenly there's kind of a whispering tiger ready to pounce here? I mean, is it, the future looks pretty good in this case, doesn't it?
So go on. Sorry to
go ahead. Anyone, sure.
Yeah, I want to make an India point, which I think is helpful. A lot of the trends that were accelerated by the crisis were clearly already there. For example, lower income households often have leapfrogged into the digital world via the cell phone, right? They don't even have a landline or a desktop computer. So a lot of these trends were already underway and got massively accelerated. What's very interesting is in India, the fact that India had made the investments in a very modern digital public infrastructure, this helped India a lot during the crisis and in adjusting to the crisis. So for example, the Indian government was able to reach tens of millions of households at the lower end of the economic strata with relief help, with a click of a button within a day. In the US, we had to send out checks, and the checks got lost, and it took 6 weeks. And the people who needed the money the most had to wait the longest. So in some sense, India was ready to react to this situation and was better prepared than many other places.
Interesting. Very, very interesting. So what we're talking about here, is a very, very trying time, a disaster, and making companies leaner and more able to respond to meet the changing demand. Just saying that really to better position themselves to that brighter future.
Yes, and a crisis forces your concentration and forces you on the essential things. And working from home on Zoom is a very democratizing experience. Everybody has the same real estate. We actually had better dialogues. Companies had better dialogues, better decision-making at times than they might have had in real life.
Interesting. And so now really we're talking about the very most interesting thing, and that is where we take this from here. Obviously, the COVID pandemic is by no means over. We see things flaring up all over the globe, but the future is looking quite interesting just from what you just said. Let's take a look at this.
We had a decade that happened in a year.
A decade of uncertainty, unrelenting fear, then tentative hope, all in just 12 months. This post-COVID world shaping up to be brighter than ever anticipated.
We want revenues to double at 100% and our volumes to double at 100% and diversify our portfolio from crop to auto, livestock, cattle, fisheries, rural health, life. Definitely a bigger penetration, more customers, more transactions.
The path to making up what was lost and averting disaster forced a changed mindset, accelerating toward new strategies for both workers and the companies that serve them.
Pandemics have a way of getting people to reassess their position, at a large scale, and not just. And this is global. So I think this at least in the insurance space, the impact can be seen across the globe.
It was clear that clearly customers were not going to have money to save anymore. In fact, they needed credit lines urgently. They needed digital payments urgently. They also needed insurance products urgently. So we actually, put our heads together along with our top team. And by the end of March, we had a coherent product strategy for the pandemic.
A strategic foot to the pedal, launching digital payment and credit health products within 60 days as critical.
I had never worked remotely in my life. I had never closed a deal with any institutional partner, without meeting them 5 times basically in my life. So I didn't know all of this was possible. So it really kind of stretched our limits, and we found, we really discovered new things about and new capabilities in this period.
Indify is changing the way loans are granted to small businesses.
Indify now thrives after redeploying its sales force, monitoring customer impact, and redesigning cost structures. A shift spreading to those it serves.
Pre-COVID, about 35% of our customers would sign their loan kits electronically. The other 65% wanted to get a paper copy and put a wet signature to it. Today, the electronic signing numbers are high 80% for us. So this is the transition that we would have hoped to make in the next 3 years, which has all gotten accelerated. And that change in customer behavior really, I think, is the long-term positive for businesses like ours.
India moved aggressively in testing, stimulus packages, and vaccinations, now reaping the benefits. The startup community seeing success and feeling hopeful.
We managed to raise funds even in this market. I'm very, very bullish about future. I think 2021 is going to be our year.
This digital channel is only turbocharging us.
So we are now focusing back on growth.
I think 2021 is going to be an even more spectacular year.
Sometimes adversity creates, it teaches you things you didn't know about yourself, gives you more courage, gives you more resilience.
Well, we've all seen diversity. In this case, we talked with 8 companies, 8 startups. Harsh, is what we're seeing here and what we're hearing here, is this what you think the norm is in India?
Yep, absolutely. And it's so amazing to see our founders and having the perspective of looking into the future and being very bullish on what lies ahead for all of them. But I think, yes, I think these have been challenging times, as we've been speaking about, and unprecedented times. But I think the founders and the businesses have really attuned their business to the new normal, and they're really looking forward to what lies ahead and making most of what the transition has been. As Anuradha mentioned, there's been digital acceleration, there has been change in consumer behavior, there have been changes in the processes, the way they were done. And though the last 12 months have been very difficult for these companies, but I believe, and I think all of us at Flourish believe, that this is here to stay, and some of these trends are here to stay. So we are definitely confident that the next year or the year which is going to come by is only going to get better for these companies. And we speak not only about our portfolio companies that's here in India, but I think all across within the ecosystem, what we are hearing and what we understand is that everyone's come out of this war zone and everyone is ready to now accelerate, reach out to their customers and just grow their business. So I think everyone's going to just keep things what was there in the last year behind them and just look forward.
Yeah, one CEO told us that that he felt that they'd just come out of a war zone successfully. You mentioned trends. I want to get this from all 3 of you. What do you see as trends moving forward? I mean, we've seen kind of a huge leap just in the last, give or take 12 months. What goes on and what goes out from here?
I think I can go first. Just on one of the trends that we saw. I think the first one is I think in terms of insurance, just the awareness which has come in post the pandemic. I think we all know that insurance is severely under penetrated in India, but I think what the pandemic has really done is created the awareness among people, just the need to buy a health insurance or any form of insurance. And the second part is the willingness now. One is awareness, and then now is the willingness to buy these insurance. I think these times have made people realize how important it is to have that protection, to have that cover. And I think this is one of the trends which we hope and which we expect is here to stay.
Anuradha, trends?
Sure. So, one of the ways that we saw many people use the time of the pandemic is to take a very, very deep and close look at business models, right? So that came from different kinds of stakeholders. It's from the CEOs, the startups themselves, who had to, like make cash last suddenly for longer, and then from the VCs who were looking at business models and so on. So there, that focus actually helped many people kind of redesign what they were, like their basic business models quite a bit, and to take a look at unit economics, cost, profitability. So this renewed focus on building sustainable business is actually like a very good outcome as well. I would just want to highlight a few things that actually people did. One is that we saw suddenly that those who you did not know were your customers suddenly became who you thought of as partners, actually became your customers pretty quickly. For example, Kaleidofin used to build savings for low income households through microfinance companies who were their partners. During the pandemic, what they realized was that the microfinance companies had physical collection forces, right? And now since they couldn't collect, they were struggling. So they had to quickly move to a digital collection modality, right? So their partners suddenly became their customers, right? So that required them to build a whole new set of infrastructure, a new set of offerings, etc. So that was one part. If you looked at people like Zest, for instance, right? Like merchants who were earlier, one of the important things about buy now, pay later companies is the ubiquitousness of your payment instrument, right? Now, suddenly like earlier you had customers wanting credit, but it had to be converted at the point of purchase. And you had to have merchants accepting your payment mechanisms, and you have to, for you to build your data trail. Merchants were suddenly looking at how do I accelerate my digital checkouts, right? Therefore, and create, point of sale credit very easily. And this was both online as well as offline merchants. And, the conversion in partnerships that Zest built during this time was again phenomenal. The third part is around the savings part, right? Like when you looked at Scriptbox, they had offerings around wealth and management of wealth. And suddenly their customers were asking them, hey, if it was a physical wealth manager, they would give me insurance as well. They would talk to me about mortgage, etc. So how do I deal with that? Can you help me? And that resulted in them building a suite of products. The one interesting thing was that there was a lot of cross-pollination between our own portfolio organizations. They were products that they could actually pick off each other and collaborate and partner in that context as well. So it was, it was quite an enlightening experience in that context.
Certainly, the cross-pollination and the ideas being traded probably came from you all introducing people in your network. Am I right?
So yes, they knew each other because they had kind of met, and in earlier, as Tillman was mentioning, in the context of our retreat, and then during the pandemic, as we looked at them, kind of sharing their experiences. So that did help quite a bit, and then it also helped when they kind of were saying that, hey, can I now, do micro products or macro products, right? Like mini insurance or term insurance, regular term insurance. You could talk to founders and they were willing to be flexible around what products could be built and how they could build them as such. So it was helped and by the fact that we created platforms for them to share, but it was also helped by the fact that people were looking at how do you kind of build a flexible digital business, and that came to the fore as well.
Tillman, how about a global perspective on this? What are you seeing, across the globe? First India, but then as you spread it out along this, future trends idea.
Yeah, first of all, I would say I share the optimism that we heard from the entrepreneurs, and I share the optimism that Anuradha and Harsh expressed. It's an exciting future. It's also going to be a different future. What the pandemic has done, it has changed how we make a living, how we shop, how we connect with our friends and families. Much of this now happens remote, online, digital. And what that means is that the platforms that help us do these type of things have even become more important in our lives. The platform, social commerce, e-commerce, logistics, entertainment. And these platforms are actually the natural owners of a good chunk of retail financial services because they have customers, they have trust, they're being used, they have high engagement, they have data. So we see a real acceleration in this trend that we call embedded finance. Finance embedded into these natural owners of customer engagement and relationship. These platforms then need new products provided by fintechs, point of sale insurance, point of sale credit. So we see that accelerating. And then they need to be connected to regulated balance sheets at the back end. So we see a whole proliferation of B2B fintech infrastructure in this brave new world. And we accelerated our own investments in India and in the globe. In the second half of 2020, we invested as much capital as we had planned in different things than we had thought on an accelerated basis. But we deployed all the capital that we had planned. And globally, the first quarter of 2021 is the highest for fintech investments ever. So this is definitely a space that has gotten a huge boost by these broad changes that the pandemic has brought about. And we believe that's good because we can help more people better manage their lives, better manage their financial lives, and ultimately be better off thanks to the innovations that we are supporting.
That's just absolutely incredible. Okay, I'm going to give you each 20 seconds here. A year ago, 14 months ago, would you, knowing that, and then moving forward into the pandemic, when it first started, when you saw markets crashing, would you ever have guessed that we would be where we are today, to your point, Tillman? But I'll start with you, Harsh.
Honestly, not really. I think at that point of time, we were taking a day at a time. And the idea at that point of time was just to ensure that the founders and the teams within the founders are doing well. I think the situation kept evolving every day, but I think to be here where we are, I'm not sure if I could see that future already.
Anuradha, briefly.
Well, when we last year at this time, we were thinking about what do we do to help people survive, right? So companies survive, portfolio organizations survive, etc. And today we are talking about how do we actually help them become the leaders, right? So it's a complete shift, which is something which we didn't expect, I should say.
Tillman, I'm sorry, but I'll give you 10 seconds on this. Surprised?
It's always hazardous to predict the future, even in the best of times. And we knew that a year ago. We knew this. We were under enormous uncertainty. We did have confidence in the resilience, in the ingenuity of entrepreneurs. And we knew that if you're guided by a couple of core principles, do right by your customers, be there for them in an hour of need, create real value to them. We knew that if you follow these basic principles, you should be fine at the end of the day. And frankly, things probably bounced back faster than at least I would have expected at the time. And that is partly because there was a massive collaborative effort, starting with governments who reacted very differently from how they might have reacted in the past. The scientific community. The biggest game changer, frankly, in the long term, is the fact that we came up with a vaccine within less of a year, and now hopefully can start vaccinating the world as quickly as possible.
That is the hope. This has been a most interesting conversation. Certainly, we've just touched on a few topics and left many on the table. There's so much to learn from these company use cases. In fact, we had a lot of other companies reaching out and wishing to share their experiences. We expect we'll be talking more and sharing more with all of you. So please feel free to reach out and with suggested topics and areas of interest. And on behalf of everyone at Flourish Ventures, I'd just like to say thank you for joining us. And what you do and what your involvement is in this case makes us all better. So please email us at events@flourishventures.com. Thank you, and we'll see you next time.